welcome to Davos Direct right here on ET Now. We bring to you day 3 of the 44th edition of the World Economic Forum. I'm Supriya Srinath. First up, it is very, very cold here. But political temperatures are indeed rising, not just in India, but here at the forum as well. In fact, Finance Minister P Chidambaram has had to don his other hat of being the principal spokesperson for the Congress party ever since he's landed here. In an exclusive conversation with ET Now today, he did say that Congress in these elections is offering a generational change, and that should be the pivot of the election campaign. He also continues to call Modi's economic ideology Luddite. He calls Modi a majoritarian and not a strong leader who actually goes out there and imposes his view. But as far as the Congress is concerned, he's candid to admit that the voter may actually vote not just for the generational change, but also keep the UPA's performance in mind. In exclusive conversation with ET Now, here's Finance Minister P Chidambaram, who also does believe elections, no elections, politics, no politics, investments will keep flocking to India.
Investors, foreign investors are more confident about India than ourselves. Everyone I met in the last couple of days has told me that he or she has investment plans for India. I will meet a couple of finance ministers and other ministers today, and I'll like to hear their views, but everyone I've met has investment plans for India.
You also said yesterday, for the very first time, that you fear there may be a very fractured mandate in these elections. How concerned are you that could be a possibility?
Many people have said that given the state of play, it's quite likely that no single political party will get a clear majority. No party got a clear majority in 2004 or in 2009. So there's good reason to believe that no party will get a clear majority in 2014. If no party gets a clear majority, what do you describe it as? It can only describe it as a fractured mandate. Everybody seems to be claiming that he or she knows the result of an election. So I said, we're quite happy to be an underdog in the election. I think going to an election as an underdog is better than going to an election in a triumphal mood.
Some of the biggest bankers and investors that we've met here in Davos are curious to know what the Congress manifesto will be. Will it be more of the same, or will there be radical new ideas, given that you have a new young leader leading the whole election campaign?
There is a manifesto committee. I'm sure they're working on the manifesto. The Vice President of the party, Rahul Gandhi, has held consultations with many groups, scheduled castes, scheduled tribes, minorities, young people, civil society. All that will feed into the manifesto.
Will the voters in 2014, at least the ones who vote for the Congress, be voting on the prospects of a new leader with new ideas, or will you actually see the vote being cast on the basis of what has happened in the last 5 years in UPA too?
Both. I think once they sit down and reflect on the achievements of the last 5 years, they will find that there has been remarkable achievements in many, many fields. The UPA 2's growth rate is slightly lower than UPA 1's, but it is still better than the NDA's 5-year growth rate. They will also, I think, warm up to the idea that the Congress is now offering a generational change. If I were campaigning, I would campaign on that idea, that we are offering a generational change. We are asking the youth to come and assume responsibility, and that idea could appeal to a very large section of the Indian people.
You've always been very candid on political prospects, and which is why I'm going to ask you this question. Mr. Gandhi, when he spoke with the AICC, wants to, I don't know if it's deliberate, but he is projecting himself as the outsider within the Congress. Can he really distance himself from the government that has been that is a Congress-led government after all?
I don't think that's a correct characterization. In fact, in his speech, he did emphasize the achievements of the UPA. He formally asked the ICC to thank the Prime Minister for what he has done over the last 10 years. I don't think he's disowning or distancing himself from what the UPA has achieved. At the same time, as one who was not in the government for the last 10 years, as one who is likely to lead generational change, he's entitled to take one step back and say, well, the government has done so much, but I bring a new perspective.
You've been rather critical of Narendra Modi, his economic ideology. You've called it Luddite, an authoritarian, a majoritarian. Objectives I'm sure he's not very happy with. But if I may ask you, will 2014 be elections about Modi's checkered past, or will these be elections about the whole development agenda that he's talking about?
Both. You can't say, forget my past record. Everybody is entitled to judge the candidate on his past record as well as on what he promises to do. His past record is highly questionable, highly debatable, highly controversial. And as a party of the opposition, if he has got the right to criticize us, we have a right to criticize him. So we will draw attention to his past record and we will criticize his policies as and when they announce it. I have not yet heard a set of policies from either Mr. Modi or the BJP which can be called a coherent macroeconomic policy.
For all those people who are rallying behind Modi because they believe he offers this strong leadership, quote unquote, what do you have to tell them?
Well, you call it strong. I call it authoritarian. And I don't think an authoritarian leader is what India wants today. What you want is a decisive leader who can build a consensus. That's very different from an authoritarian leader who will impose his views upon the people.
For the last two questions, I urge you to wear your finance minister's hat once again. Fiscal deficit was the big concern. You kept saying all along you will not breach the red line on that. Do we hope you to surprise the world at large and Indian and stakeholders of the Indian economy?
We'll wait for February 17.
4.6% is what is being spoken about.
I don't know yet.
RBI in its report yesterday said that there is merit in targeting inflation at 4% plus and minus 2%. Many people believe India doesn't have a very sophisticated data flow that happens, and which is why it's not the right time to do.
That is not an RBI report. That is a report to the RBI by a committee appointed by the RBI. RBI will now discuss it. I'm sure the government has a point of view. Other stakeholders will have a point of view. A 4% WPI target plus or minus 2% is an ambitious target. Nothing wrong with setting for ourselves an ambitious target, but we must then have a roadmap and a timeline to achieve that target.
And making CPI the nominal anchor, do you think it's still time? Because the data is very, very volatile.
I think, I've not read the report, but what I've read about the report is they want WPI as their reference point.
Talking about investments, Aberdeen is one of the biggest funds in the United Kingdom and also one of the biggest outside of the United States. In India, it has assets worth $10 billion in equities. It's also one of the 5 top FIIs in Indian markets. Speaking about India, he believes politics will not really impact the investments that will flow in. He also believes in the banking space and the consumption story in India. Stocks that he's betting big on, ICICI Bank and HDFC.
The bulk of our assets are invested in emerging markets or developing economies, and India, we, as you said, we've 5 billion in one of our funds, 10 billion in total. So we very much like the Indian market. We like the companies there, because in emerging markets the key question you've got to ask is, do I trust the management to look after my interests as a minority shareholder? And in India we find companies that do that for us.
I'm glad you're speaking about India. I first thought I'll begin with global markets, but we will stick with India. You said you have assets worth $10 billion there through direct and indirect purchases. You did acquire Blackstone Asia some time back. If I may ask you, Asia and your list of priorities, and especially India, where markets are close to a record all-time high, where does the story really unfold from here as far as India is concerned?
Well, I think developing economies, emerging markets have had a rough year. They're very much out of favor, and people look at the macro situation, such as the politics. So the thing that holds the Indian markets back slightly are the politics, and Thailand, of course, is the same. But as I say, I think you've got to look beyond those and look at the companies and see how well the companies are doing, and that's how we approach investment.
Are there any particular sectors that you're bullish on? Because everybody talks about this India consumption story. Some people in India are beginning to voice concerns that maybe it is a tad oversold. Are there still companies that excite you? And what space are these companies in?
Well, we like the banks. I mean, we've always thought the banks are central to growth and reflect growth in these developing economies. We especially like emerging market banks because they're run properly. They have more deposits than loans. They don't have any investment banking. They lend to people who pay them back. And so we like the banking sector. But yeah, we do like the consumption story in emerging markets because more and more they are beginning to consume.
Asset managers are allocating more and more funds to equities versus fixed debt incomes, especially with the US markets now coming around. When we were beginning this conversation, you said it's equity markets that's really taking the lead, and you know, growth will follow in all kinds of markets, whether it's emerging or developed markets. When allocation of fund is concerned, how is Aberdeen looking at this?
Well, as I say, we really do like developing markets over the long term.
What I mean is between equities and fixed debt.
We like equities at the moment just because as I said, the equities are a lead indicator of growth. The markets have gone up. The companies are doing very well, and they're full of cash, which they're returning to shareholders with paying increasing dividends. The problem with the bond markets at the moment is they're at an all-time high, and interest rates are at sort of 200-year lows in some of the developed countries. So the only way they can go is up. They can't go down anymore, and when interest rates go up, bonds tend to go down. So you've got to be very cautious of the bond markets going forward. But we are still seeing a lot of money going into, especially credit. Emerging market, local currency credit is something we're seeing a lot of flows into at the moment.
Most fund managers, like I said, are overweight equities, and like you yourself said, bonds is a slightly precarious space to be in. When you talk about developed markets and with the whole US Fed taper finally beginning, how does this change your bets across the world, both in developed and in emerging markets?
Well, I think you've got to go short on the yield curve and also probably avoid government debt. But government debt still continues to do well because there's a lot of pension funds now need to own it to match the liabilities. So it's still an area that we will see people investing, especially at the long end of the curve, the 30, 40 years. And if I was governments, I would be issuing 30-year paper because they're never going to get another opportunity to issue it so cheaply. But against that, they're borrowing money short at virtually nothing. So governments are in a strong position at the moment.
Hassan Rouhani, the Iranian president we've been telling you, is the man that the world has been waiting to listen to. He did not disappoint. Peace process with the United States and Europe is on the right track, according to Hassan Rouhani. Speaking to over 2,500 political, corporate and thought leaders, Rouhani said Iran is interested in constructive cooperation. He in fact urged a whole host of European companies, especially the ones in the energy space, to seize the opportunity that exists in his country.
With the implementation of the Geneva Agreement last week, Iran's relations with European states will be entirely normalized. Engagement between Iran and the United States have entered a new phase. Iran is prepared to engage in constructive cooperation in promoting global energy security by relying on its vast energy resources in a framework of mutual interests. The security, production and supply of energy based on the geostrategic necessities of the countries is the biggest factor in turning energy to a key and sustainable factor in promoting peace and stability.
The relations between Beijing and Tokyo have been strained for a very long time now, especially after Shinzo Abe decided to visit a war memorial in China. But speaking here at the World Economic Forum in historic lecture, he stirred quite a few feathers, created quite a controversy when he actually said the relation between China and Japan echoes that of World War I. We get you details in this report.
Shinzo Abe created history as he delivered the keynote speech at the World Economic Forum. Abe was the first Japanese Prime Minister to do so, and he made the historic opportunity count by setting the record straight on his controversial visit to a Japanese war memorial in China. Abe also called for military restraint in Asia, but went on to compare rivalry with Beijing to the situation in Europe before the First World War. China was quick to retaliate, slamming Abe for his comments, saying he should face up to history and consider what Japan has done to China rather than ideate on hypothetical scenarios. China rebuked Abe's remarks, asking Japan to explain its military build-up instead.
The Japanese leader's memories of history cannot be misplaced. It would be better to face up to what Japan did to China before the war. Now it is Japan who should increase transparency. Japan should explain why it is trying so hard to expand and build up its military. What is its real objective?
With no signs of any side giving in, ties between the two Asian powerhouses have become the highlight at the World Economic Forum this year. Will there be a peaceful end to tension in East Asia, or is this the beginning of a storm? Only time will tell.
Politics continues to make the headline, whether it's about elections in India or the China-Japan strained relations. But let's shift focus away from that, back to economy, back to finance, and back to business. Top corporate leaders here at the World Economic Forum believe growth is beginning to get back on track, but a lot more needs to be done. Remember, this is a forum in a very long time when it isn't a financial crisis that's really looming large. This is a forum that has been dominated by talking points like income polarization, 75 million people unemployed, disgruntled, the tensions in the South China Sea, and even the destabilizing Fed factor. But first up, the big CEOs with their opinions.
It's lackluster, it's uneven across European countries, expected growth is just around 1%, mostly coming from core countries. This is not enough to close output gap.
Helping on the income inequality front is create more jobs and put more people to work earning a good living. And I think in the U.S. you're starting to see job growth come back, unemployment coming down, but we still have a lot of work to do. And I think the key is just to create jobs and create growth.
The youth situation and the unemployment situation is really horrific. And here you have an aging society. Youth are really the scarce resource in Europe, and you're losing part of a whole generation. And it's particularly when you look at the periphery countries of Europe.
Michael Dell is a part of that illustrious list of tech titans who really started his business from a small garage in a US university. He stayed listed for about 25 years, and in 2013 he decided to delist Dell. I began by asking him that how does this really change life? What is the difference between being a private entity and being a public listed company? Dell believes it gives his business more agility and helps him grow his business faster.
This allows us to invest with a much longer term horizon, investing in our services business, in research and development, software, growing in the developing countries, and our business is growing. As a private firm, we have the luxury of thinking about our business in a longer term horizon.
Does it bring in more agility to business if you're a private entity? Are you more agile? Are you quicker at taking decisions?
Absolutely. We just have a much more simplified decision-making process.
Will we see a Dell ever list again?
I don't have any plans to do that at this stage.
How is Dell taking up this whole challenge of, the whole tab revolution that the world is seeing, whether Samsung and Apple are really at loggerheads? Where does Dell figure in these scheme of things?
Our tablet business is really growing tremendously. We grew from the first quarter to the second quarter, doubled in size. From the second quarter to the third quarter, doubled in size. And from third to fourth, basically tripled in size. So we have absolute vertical takeoff growth in our tablet business, and I think that continues in 2014. Our commercial client business, the desktops, notebooks, professional workstations, it's currently growing at a double-digit rate. So we're gaining share. Market might be, slightly growing. It's not. It's all going this way or it's all going that way. Actually, there's still quite a lot going on across the spectrum.
How important is it to be in your sector and have that cool quotient? Many people believe Apple is doing exceedingly well and Samsung is beating Apple to the game because they are cooler companies, if I may. And I think that's very important for a sector like yours. Do you concur?
Well, what's happening, of course, is now with the rise of the Android tablets and the Windows tablets, the market is really changing quickly, and we're seeing a tremendous growth in our space. We're certainly not the only ones, but I think this is not just the domain of one or two companies. We're certainly showing up in scale.
Davos isn't just about boring businessmen or hard-nosed policy makers. It is also about the people who dream and do stuff out of the ordinary. Vivek Ranadive of the Silicon Valley is one such man. Remember, he's the guy who actually outbid Steve Ballmer to win Sacramento Kings of the NBA League. And guess what? He's bringing the game now to India and is indeed in dialogue with both Mukesh Ambani and Anand Mahindra.
Sacramento is the state capital of California where I live, and it's the only sports team in Sacramento. So if the team had left Sacramento, it would have been devastating for the city.
Was there a kick in beating Ballmer to getting that one?
Well, Steve is a friend, so it was interesting, but it was really the fans of Sacramento that spoke out loudly.
You also want to bring the coach to India, and you have plans here. You are in talks with Mukesh Ambani and Anand Mahindra. Can we get an inkling into what you're really planning for India? Because as a sport, it isn't really very popular.
My dream is to make basketball not the most popular sport in India. It'll never surpass cricket as the national pastime. But if it's a strong number 2, that'll be a huge accomplishment. So our hope is to set up leagues in India, to make the game popular in India, set up clinics.
Do we always think business even as we do sports?
Well, I'm sure we do, but I believe that the $540 million that I paid for the team was actually a steal. There's only 30 platforms of this kind. It's got a global market. It's one of the few pieces of content that people want time shift. They want to watch it in real time. And when I think of my basketball team, I think of it as a social network, a global social network. And I can use technology to capture that network, expand it, engage it, and there's always ways to monetize it.
Alright, basketball is a personal favorite, a game that I played through all of school, so my vote goes for Sacramento Kings. But away from that, and before we end this show, let's do a tech check. I did ask a whole host of Indian and global CEOs what is the tech gadget that they've laid their hands on. And believe me, it seems health is the big mantra. Some of these guys are very, very cool and up with technology. Others are a bit tech Luddite. What is the latest gadget you set your eyes on? What is it that you're trying out at this moment?
Fitbit. It tracks how many steps I take a day.
And you're using that particularly in Davos?
Not too much in Davos because of the snow, but in good weather I think I can take a lot more steps and count them.
I've been playing around with this Fitbit. I think that's great. I've been competing with some of my friends to get the most number of steps, and a great way for us to stay healthy and have a little friendly competition.
iPhone 5S. Loving it. And it's changing the way you sort of live your life. Absolutely.
The jawbone, which really in a way kind of measures how many steps you take, how many calories you need to burn depending on your height and your weight, how much you need to sleep, what kind of food you're eating.
Started with the jawbone UP because the WEF wants us to be fit.
This band on your wrist which kind of gives you a running commentary on what you're doing.
I just bought a charger for my iPhone which seems to be running out of power every now and then.
Jawbone speaker for my telephone calls.
Latest tech gadget is my son's PS4. I like football, so I play FIFA 2014 now is out. Graphics are really good, and FIFA 2014 is my new gadget on PS4.
That's it then on this edition of Davos Direct. Do stay tuned to ET Now for news that breaks and opinions that matter.